What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is to provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, as you can see, I'm doing this a little bit differently. There is a lot to go over, but and essentially why I had to mark this down or jot this down because again, this is leading into a very big week. Something I stated in the last weekly update. There is the dynamic of the market is completely changed now, and we have our catalyst, we have our black swan to essentially reset the clock on everything. And so this is why the next coming weeks are going to be huge. And so with that being said, before I get into this banking crisis, which is ultimately going to be driving everything from this point, is get into some of the other events that have occurred this week. Now, we had core inflation coming this week. I thought it was going to be a lot hotter than it was, but it did come in line. It came in at 6.0. That was what was expected. A lot of the things that I point out in that report are still very high. Those things aren't hardly even budging, in some senses are still even increasing. You have to understand, and we've talked about inflation before, is inflation essentially will jump from one thing to the next, just depending on the consumer and where the consumer is trying to save. And so you see that change in there. Again, you can't ignore the fact that credit cards are at all-time highs. You can't ignore the fact essentially savings rates are still extremely depleted. You can't ignore the fact that people are working multiple jobs. We've talked about the jobs market many times before and how it essentially gives a lot of false expectations on what's currently going on. Again, people still being unemployment are counted as being employed, and so these numbers are highly manipulated in the way that these statistics essentially are coming out. So, being said, core inflation, nonetheless, still sitting very high at 6.0. Whether you want to say it's not there or not, it's still very high, still enough to make people have to work multiple different jobs. And towards the back half of the week, we still have to also understand that Meta started laying off heavily again on top of everything. You're getting multiple layoffs. Amazon is having multiple layoffs. A lot of these things are still occurring, and we are about ready to see. This is the second half. We just got out of the eye of the storm. This is the second half in the worst part of it that's about ready to happen. We are in essentially the final stage of the resetting of the clock. So being said, also during this week we have the ECB. They were expected 25-point basis move. You have to understand they've went a decade without raising interest rates. And before they even started, when they started talking about raising rates, I said at that point, the last time they did this, the market crashed. They just jumped another 50-point basis move over this back half of this week as well. And they're in a very bad, even worse than we are as far as the banking system is concerned. Credit Suisse has been in the headline news. Obviously, they've done really bad over the past couple of years, so it's not really saying like it's great, but they are a very well-known bank. Nonetheless, have another collapse going on in the banking system over there. So those highlighting the week of currently what's going on. But again, the overall thing, the overall thesis, and understand what's going on is this banking crisis. Now, this all started with SVB not this past Thursday, but the previous Thursday. Again, these things have been playing on the background, something I've always talked about. You have to understand the reality of the situation, and then this utopian picture that is presented to everybody from the administration and from essentially those other people out there, the media, right, trying to portray a picture, because you have to not let panic set in, because once panic sets in, you have absolutely no control over the situation. And so they try to paint this utopian picture. It's good in some sense, but bad in another sense, right? Like, people are just going to say, well, that's just not right, right? There's something awful or odd about what's currently going on. But you have to have that picture because you don't want panic. We've seen since SVB, it's created a classic bank run and cause essentially an SVB to fail. From that point, last weekend we had Yellen from the Treasury, we had the Fed, and we had FDIC come up with essentially this bank term funding program to prevent a backstop, to prevent a huge bank run happening on essentially last Monday. So essentially the futures opened on Sunday and they actually gapped up because of this backstop. That's fine and dandy, but there is a huge problem going on here. And we've seen that play out throughout the week. Now, not only on Monday do we get a gap up, obviously you're going to have the administration coming in. Biden came in on Monday and essentially said things were okay. He gave the whole speech. Yellen's been saying everything's okay. Yellen actually had to go in front of the Senate and essentially talk about the banking system and everything else. Again, she didn't really have a essentially a good any kind of relief in the words in what she said aren't solid ground to say that the banks are safe, right? There is a huge problem, and you have to understand the pace at which they moved should be concerning to you because there is a huge issue going on. It's not just all of a sudden happened, it's been going on. This is why I talk about this, the reality of the situation versus what is portrayed. And this is how markets work in general, right? You have to know, and to take advantage of markets, you have to know the reality of the situation and what is being portrayed, and differentiate between the two, and then know that if the reality of the situation actually hits this utopian perspective, that's when stuff either crashes. And so, nonetheless, the banking crisis started there, and as you can see, we developed over this past week. We've developed the banking term funding program, and they're only visualizing a maximum usage of this being $2 trillion, which is still a ton of money, right? And so, with that being said, the Silicon Valley Financial Group essentially established Chapter 11 bankruptcy by the end of the week. The U.S. banking borrowed $165 billion from the Fed this week alone. So essentially, all what Powell has been doing with quantitative tightening over this past couple months, past year, has essentially all been undone in a week. That should be frightening to everybody. What's going on there? HSBC buys SVB, United Kingdom business, for $1. Again, you're going to see a lot of these transactions go through. You just need $1 to essentially establish the transaction, right? That's all that dollar is there for. And so, being said, a lot of these bigger banks are going to gobble up pieces of these bigger banks that are going under or failing, and we've seen that essentially going on with Swiss Bank as well. So the First Republic falls under pressure of the largest deposit of $30 billion. You have to understand what happened is all these withdrawals and bank runs that are going on for First Republic started going under, started making headline news. So everybody essentially transitioned all their money back into Chase and all these other bigger branches, and then Chase turned around and deposited $30 billion right back into First Republic, right? This is what helps establish these banks, and so these banks don't go under is they need depositors. If they don't have depositors, and also why the Fed is only going to backstop depositors. They are not going to backstop the investors. So you're actually buying stocks in these banks, you're going to go under and you're not going to get reimbursed for any of that. It's only backstopping the depositors, essentially the banks that deposited their money right back into these banks that everybody's pulling their money out of. So that's their backstop right there. So they may not have a backstop because Yellen said, "Oh, we're not backstopping," and then they come up with this program, and then everybody else defending, oh, they're not actually officially they're backstopping. What they're doing is they're rewording it like they've been doing this whole time and saying, okay, well, this is what we're going to do. Big banks, all that money that you're getting, because there's a huge influx of money that was coming in to Chase into all these bigger branches in the beginning of the month or the beginning of the week. They turn around and deposit that money right back into these other banks to essentially try to cover them. Now, if something happens, the bank, Chase and all these banks that are depositing the money right back in, they're now backed by the Fed right now because of the deposit, the 30 billion. So they're backing this 30 billion that they put right back in. So they are backing them. They're just going to play this this essential circle jerk of however you want to call it to try to protect themselves, and that's exactly what they're doing. So First Republic falls back 30 deposit. USBC seeking Swiss bank top in any Credit Suisse deal. So UBS essentially came in and said they're going to try to save what they can of the Swiss bank, but also understand that they don't want any part of it, right? Like some of these banks and funds and deposits have been so mishandled, other banks just don't want a piece of it. And that's what you're seeing is as soon as they start looking at the books, they're like, no, we don't want this. If anybody else wants a part of this deal, can you help us out? And people are like, no, we can't do it. And that's the problem because, and this is something I've stated in the last week, is that now that we have our Black Swan event and this is playing out, they are trying to control the news so that nothing happens during the week, right? It's not saying that you're not going to be able to protect all the news that comes out, but they're trying to push it off to the weekend so that way markets are closed so that they can gather their plans and get prepared for the week, come out with a new statement on Monday, they're trying to paint this picture in hopes that a bank crash isn't going to happen. You can't stop this. This ball has already started rolling many months, years back. This is what's going to happen in the nasty outcome of this. And so as soon as the markets closed on Friday, you had Wall Street Journal release a report stating 185 banks face same risk as SVB. There's a lot of banks under there that their books aren't well established at all. And we're going to see more of these things folding. And you have to understand that there is a reason why the bank term funding program is established the way it is because it's only allowing big banks to make it out of what's about ready to happen. These little banks can't deposit money back into other banks because they don't have it because they're underwater. So what's happening is all the depositors that are going into JP Morgan and Citigroup and Bank of America, they're going to turn around and deposit them. So they're backstopped. Those banks are backstopped. Other banks will not be. And so they can't save 186 banks. This is not going to happen. There's not enough money in the system. There's not enough money in the back system to be able to do that. Now, I think it's only like 200 some billion that is actually backing this funds program. But it's, again, much like the bank, they can take, all they got to have is a fraction of that money to backstop 2 trillion. So they're doing the same thing. So they're just re-leveraging the same amount of money to backstop themselves. But again, packaging in the words, it doesn't look like an official backstop. Taxpayers aren't going to get hit because, oh, we're pulling it out of this fund. Well, who funded that fund that's essentially paying for this backstop? Taxpayers paid for that fund. So however you want to repackage it, that's just the way it is. So you can try to, again, reinvent the wheel or repackage it however you want. It's still the same thing. Nonetheless, Bitcoin has essentially broken off from the banks for the first time in history. But the big problem, the big concern you have to understand here with Bitcoin is that this is the reason why Bitcoin was established. But you also have this thing called CBDCs, which has also been established and said by Powell that it wasn't ready. Not this past week, but the week before in testimony, it's not ready, but it is there. We've seen how this has worked with the pandemic and vaccines, right? It doesn't matter if there's a crisis, they will throw it into whatever is necessary. They don't want to lose power, and they will do everything that they can not to lose power. You have to understand this. And so I wouldn't be surprised if information comes out about crypto. And I think their back pocket is Binance and Coinbase, or potentially just closing. Like my good friend Viva La Coin has talked about multiple times about closing all on-ramps to Bitcoin and essentially declaring it as being illegal, right? We did this with gold, right? When back in the day, this happened with gold and could potentially be happening with crypto in the US. And so nonetheless, Bitcoin is broken off, and Bitcoin is actually, this is why Bitcoin was created. But you have to understand CBDCs are something that has been established and been worked on behind closed doors as well. So again, it is a very, very sticky situation in which we're in. But as I'm talking through this, I'm hoping you can visualize what has actually happened, the reality of the situation, what is currently going on. There is no easy way. This is what's going to happen. And also during the week, I talked about this on one of my other um, videos throughout the week, but I know some people may only be listening to the weekly update. So this is something I want people to be aware of, that if bank failures leads to a contraction in the money supply, i.e. the total amount of money in circulation, it can contribute to disinflation. So now we are potentially looking at, if we get multiple banks folding at one time, it's a big enough event, and potentially some of even the bigger banks, that what's going to happen is you're actually going to get your disinflation, and it's going to come rapidly because you're going to getting so many banks failing, tons of people losing their job, interest rates are so high. This again is going to be accelerated. It's not saying that it hasn't been there. All this stuff has been there, but it's now going to be really highlighted in the next couple of weeks and months on what's actually occurring. You're going to get your disinflation. You're going to lose to deflation, which is way worse than inflation. So you're going to have absolutely no demand, right? Because credit cards, again, all-time high, people working multiple jobs, wages, the wage gap between that and inflation still being high, right? You have to understand there's still that huge gap, and why people are working multiple jobs. Again, it's a really bad situation we're in, and we're going to get, I'm recording this on a Sunday or Saturday morning. Things are about ready to get even 10 times worse. You're going to get more news over the weekend, and then next week it could be extremely nasty, and it will be because this coming week we do have monetary policy coming out. Now this is what is important coming into this week. After all that is going on and currently going on with the banking crisis, you have monetary policy, which is sitting at 4.75. Now, we were originally projecting, I think at one point it was up to like 75%. We were coming in with a 50-point basis move coming into this week. And then now that the landscape has changed, this is what I tried to talk about last week. Everything has changed. We have our catalyst. This is what we're waiting for something to break. Now that we have something to break, this is the turning point in which everything is going to change. But with that being said, it's not saying we're going to go straight up. That's saying that the big cataclysmic event is on. We're on the cusp of a big potential crash, right? I'm not going to call a crash, but we are on the potential of a huge crash that I think we haven't seen in history at all. And being said, monetary policy, now they're saying now a pause has essentially been introduced to 60% that there'd be no hike, 38% just a 25-point basis move. If we do a 25-point basis move and follow ECB and continue to lay on rates, you're going to absolutely crush market. You're going to actually crush a lot of banks doing that. The question is Powell going to save face and go with a 25-point basis move, or is he going to actually pause because we had something break? Is he going to readjust? Now, the problem with that being is if he goes on a pause, your next monetary policy is not till June. So you're going to have 2 months of no monetary policy. So if you go without making a monetary policy adjustment now, you're going to have to do emergency rate increases, decreases, whatever between now and then. And so that is what's important. That is the biggest takeaway of what's about ready to happen. Again, you are on the cusp of 186 banks potentially going under. 186 banks could cause disinflation. But if this was what you were planning, you increase it 25, and you know that the bigger banks, again, you're protecting your depositors, those big banks that deposited all that money, Thank you for moving your money over to Chase. So Chase is just going to put their deposited money in to save those banks. And then if something really bad does happen, at least Chase is still protected because uh, the Fed is backstopping those big banks. This is the game that we play. So nonetheless, monetary policy, that's going to be out on Wednesday. The interest rate decision is going to come out at 2. This should be 2 p.m. I don't know if it says it's a.m., but this is 2 p.m. 2 p.m. Eastern Standard Time. So the interest rate decision comes out 2 p.m. Eastern Standard Time. We'll see what happens there. My projection is I'm just going to wait and see. Right now, the dynamic has changed so much. We still haven't even gotten to Wednesday. There's going to be a lot more news between now and then. I'll let you know Tuesday when I do my daily update. We'll know at the end. We'll have a better idea of what could potentially happen. As of right now, I'm still very undecided on what's going to happen. I have to see what happens in the next couple of days again because more news is coming out about banks. More banks start breaking now. I could see a pause, and then we'll wait and we'll see. And we'll see how many more banks break, and then go from there. Again, things are not looking good. It is only Saturday morning, and more news is coming out that these other banks just can't support other banks. So now we wait and see what happens to Wednesday. Upcoming monetary policy, again, we have the 22nd, so we have this Wednesday, and then again that huge gap till the next monetary policy in June. Next core inflation is on the 12th. Again, core inflation I think isn't going to matter. If banks start folding and we get this huge disinflation, it'll lead to deflation. You have to understand, again, that's worse than inflation, and understand your demand is absolutely dead at that point, right? And so going to lead to huge negative GDP. You're going to get your quote unquote recession or depression is exactly what's going to happen. So this is something that's absolutely absurd. Is SPX is pricing in 121 points. 121 points. It's very rare you see this. We've had some big events over the past year that we saw 110 points or so, but it's gone up another 10 points. We haven't really seen this since essentially the pandemic. Numbers like this being priced in. Tesla's still very high, obviously, because it's had big money, but it's been consolidating, so that's not as big. Bank of America or Boeing at 10, JPM at 8. The fact that the value in your banks are at such high priced in moves, they're not trying to let anybody capitalize on what's currently going on. So unless you've been holding puts till this point, they aren't going to let people capitalize on the potential downfall of what's going on. So you have to watch out for that. It's going to be extremely hard to make any kind of money on the put side. People are anticipating that and trying to protect themselves from that. So just be very mindful of that. NVIDIA monster rip this week. It's got huge upside. If this cascading event happens, a crash happens, NVIDIA is not going to escape this. It's got some big news coming on this week as well. That's why it's been also running up. But nonetheless, 17 points. NVIDIA, that it's priced in 17 points. So let's get into the charts, and hopefully not make this too much longer because I know there's a lot going on. And I am on the monthly here. So this is what we're looking at. The banks or the market obviously is having one heck of a time trying to essentially break the 4150. Over a year, we've spent many times trying to break. Well, we've broken down, and then we've just been held under this for a long time. And this leads, I know a lot of people have been drawing out some crazy, ridiculous numbers on some funnels or whatever that they're seeing. Again, that doesn't mean anything. During the pandemic, people thought that we were going to follow, I think it was this trend line, which is way down here. I don't even know how to draw that, to be honest. But people are expecting this trend line to be met from here or something like that. I don't even know. But nonetheless, I thought it was absolutely absurd. I saw a chart that was like that. It's not going to happen. If that happens, right, we're going back to caveman days. We're going to reset the clock so hard the financial system isn't going to even matter by then. So just realize that the market does drop that far. It's just not going to work. Okay. So that with being said, what we got going on here is we have to see the downside. Obviously, are low. We're holding roughly that 3,500 is where things are at. So currently where we're sitting at technical wise, you have support at the 3,600. Again, I think we're going lower. You have a very strong support at the 3,200. This is what I talked about in the beginning of the year. I really think 3,200, and I marked it here. I think 3,200 could be the bottom if we do have a crash. Again, it's going to be very amplified if this does play out. I'm not saying that there will be a crash, but the likelihood of a crash is extremely likely. And so this is how you play markets: is you go by likelihood and the odds of it actually happening. This is where risk management and everything come in. It's not saying you put your life savings on puts. Obviously, you can see that banks and everything else, institutions, are trying to protect themselves from the put side, and so they price in a ton of money. So if the market goes down 100 points, you aren't making anything. So you have to understand that on the option side, this is where they're safeguarding themselves from that. So the only other thing you can play right now is either futures or, again, SQQQ or something like that, that would essentially protect or allow you to capitalize on that move, right? And so understand that even trying to short shares, right? It's hard to find shares to short anyway. But with all that being said, they are trying not let people capitalize on this situation. You have to understand that. And this is what happened during the pandemic. We were getting limit downs, at least like 2 limit downs a day. They try to price in so much because of that, right? And we're seeing this now, and we're at the verge. The fact that they're trying to price in 121 points is absolutely absurd. That is a huge move. And I think it will still, the way this thing is setting up, it could be a lot more than that. You have to understand what's on the cusp. A huge collapse of the financial system, a global financial system, could potentially hit the 3,200. Again, that's where my gauge is. It could go even lower than that. Really, you're looking at the other support being around 2,500. Do I see us dropping that low? Anything is possible. Everything go to zero. Everything go back to all-time highs tomorrow. You have to play both sides again. But what's currently being set up, I see us at least dropping down to 3,200. Anything more than that, I don't really know. I think that's just more of a wish than anything else. I think more than 3,200. Again, anything is possible. I'm not going to sit here and downplay anything other people have said out there, other analysis said out there. You know, this is just my opinion, right? And I think 3,200 could be our bottom. I wouldn't be surprised if we drop a little bit below that as well. But my idea of the way things are currently playing out, 3,200 is my target. I'll reassess when we hit 3,200, if we hit 3,200. Nonetheless, we'll see what happens there. But again, I'm not going to even talk about the upside, this banking crisis. You're going to get some sort of downplay off of this. I just don't know how much. Again, if there is panic, you can't control emotion. Things are going to happen, is what I'm trying to say. So let me drop back down to the daily. So currently right now, you're seeing some strength. You saw a huge sell-off here on Friday, but we'll see. We'll see if this thing can hold the 3,900. Again, I think this thing is going to break down. Again, your floor here is roughly around 38. I think this could potentially be broken this week. Again, 36 is roughly, again, the psychological numbers. So every 100 points, you're going to get some sort of bounce. Question is how much, right? So again, if it's a crash, levels aren't going to matter, right? I'm not saying it's going to happen this week, but just be prepared. There's a very, very, very high chance of something really, really bad happening, is what I'm trying to say. Again, not financial advice at all, just purely entertainment purposes. Nonetheless, we'll see. But 3,600 is another strong support, so we'll see there. Again, if this thing wants to try to push up, you got resistance here, roughly around the 4,100. Again, you need a really strong catalyst for us to think that 4,100 is coming, and I don't see that, so I'm just not going to talk about that. The dollar still holding 103. You need, essentially, the bears need this thing to break out over 105 and then go from there. But we'll see. Again, if this thing does lead to disinflation, it's not going to matter. This thing is going to absolutely get crushed and come down. which I am anticipating happening. But the thing is once the fear comes in and everything, the dollar will strengthen. And then, like I said, I think this thing will just wick and just start selling off when you start getting disinflation, because you're killing the money supply essentially at that point, or money circulation at that point. So crypto is what I talked about. Absolutely monster ripper. Again, I think, again, this is conspiracy theory, but this is ultimately, this is why Bitcoin was created, for this exact situation. The question is the Fed going to come out with some news that's going to cripple Bitcoin? Is that news perhaps to do with Binance? Binance has been restricting people from pulling money in and out, USDC and stuff like that, in and out of Binance. I think Binance could be that back pocket move for the Fed if they need to, and expose something on them to perhaps cripple crypto in itself, and then restrict any entry. That would essentially restrict one of the bigger exchanges and put everything into Coinbase, and then say, okay, well, Coinbase is no longer doing that as well. We'll see what happens. Again, I'm not trying to feed too much into that. Bitcoin could fly off of this too. It could essentially detach itself and do its own thing, right? And this is, again, why Bitcoin was created. But again, you're also dealing with a government that wants CBDCs and still wants to keep power, right? So you can't think that this is going to go smoothly nonetheless. But we'll see what happens. Again, not try to add too much conspiracy theory, but just the thought I had there with crypto. Tesla, very interesting situation here. We'll see what happens, but ultimately, again, it tried to break back over the 186. It's not going to happen. You got the floor here roughly at 167. This thing rolls over, getting a huge gap filled to 140. And then even there, and still, you have some pretty shady support here in between before you hit 100 again. So you're going to get a nice bounce off of 140. But again, if this thing just crashes, you might get a blip and then drop back down to 100. We'll really have to see. Again, I don't want to go over too many support levels, because if something changes, it's going to be very different. And I don't like the current state of the market right now. Is very, very cautious to think that this thing is just going to keep going. NVIDIA, again, had some great news. Again, it has a huge gap. It still has not filled. So you need to be very careful of this, because like I've shown on many others with BA and banks and everything else, that's going to be filled at some point. And I'm sure it's going to be soon. So this thing starts rolling over again. It has and you got this huge rip right here that hasn't been filled either. So as you can see, this thing if this thing really starts getting some fuel to the downside, it's got some huge drops it's got in it. This is why I've been bringing up NVIDIA for that fact, because it's got some huge gaps that it could potentially fill. Again, it's got news, so it could continue to rip, so you have to be careful of that. But again, if the overall market sentiment is really bad and the market starts crashing in general, this thing's going to come down. But it's got huge gaps to fill, so just keep that in mind. So that's why I keep bringing it up. Nonetheless, BA, again, it's starting to actually show signs of weakness as it's starting to downtrend. So we'll see if this starts to really come down. Again, it's got great support here at the 175. So we'll see. It's got good support here at the 191. So if it does break that, it's got a little bit of gap and then a huge gap there down to 155, which a lot of these I think are all going to fill these huge gaps here pretty soon. And then we'll have to see how the market looks from that point. We don't know what to anticipate. We'll essentially prepare for the worst and then see what happens. That's the best way to do it. Risk management is huge, just in case. But we'll see. JPM actually starting to break down and fill this gap. It's been forever for it to break down, and it's finally coming down again. Banks will lead the way. Everything else will follow. JPM has support here at the 117 mark. It did finally break this level here, the 129. It hasn't really retested. Like I said, you might get a little bit of a bounce here after 124, retest, and then you might get a massive dump after that. We'll see how we open on Sunday and going into Monday. Goldman Sachs, massively just getting destroyed here. It's got support here at the 291. It breaks that, then it's pretty much, and everybody everybody for themselves at that point. Bank of America, same thing. It actually broke support, retested it, and started selling. You want a bigger hook to the retest. The bigger hook on the retest is normally the harder rejection and the harder dump. So that's what I'm looking for that on the banking side. But this video has been really long, so I do apologize that. But there's a lot of information. I said these videos will depend on the state of the market, and right now there's just so much going on. You can't ignore what's going on, and so all the information needs to be digested so you can understand what is going on. And that's why I have this channel, is to not only help myself, reinforce my thoughts, theories, and ideas, but to help you and educate you on what's going on, the reality of the situation, which is the utopian perspective that is brought to everybody and presented to everybody. So that's what I'm here for, and I'm closing up shop. Be very careful this week. There's a lot of information that I think is going to happen this week, so just be mindful of that. Being said, have a great day. Manage risk. Drop a comment, drop a follow at Hemi137. Do daily updates there as well in the morning to give you great insight, and do updates if there's anything that does happen throughout the day. So with that being said, have a great one, and I'll see you guys on the next one.